The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing out there today? Let's check it out. I'm your host, Darrell Martin, here on the Diagnostic Trading Hour here at TFNN. And don't forget, you can listen to us anywhere. Got tons of live trading commentary coming to you right here at TFNN all day long. And you can listen to it at tfnn.mobi as well. Or join us on Tiger TV at tfnn.com. Let's check out where the markets are right now. We got the S&P is down just 1.5. We have the NASDAQ down 3.75, down 4 now. We have the Russell down 3.9. Dow holding strong there, down just 2 ticks, 2 points right there. We got gold down 26 points, making a big move today. We got silver making a lot bigger move, down almost 5%, down over 4.5% right now. We have copper down almost 0.75% there. We got oil is down just a mere 15 cents. Natural gas down about 0.75%. We got corn down $3. We got soybeans down 7. Euro dollar is down 141. Pound dollar is up 6. Aussie dollar is down 19. Euro's down $1.83. An insanely massive move of a low probability but highly massive move. And we got the U.S. yen is down a mere 22 pips. Pound yen's down only 54. And so pretty surprising to get those massive moves. But really, obviously, that's the euro dollar dragging the euro yen. And look over at the dollar CAD there, down 45 pips. And the dollar franc is up. That's right, up 57 pips on the day. So we had some major moves, and we can look at a few of those and look at how they went across and how they came out across the board. But, you know, it's just it's very important to know where those deviation lines are, to use them for trailing stops, potential reversal plays that they can be used for. One of my favorite ways to use them, of course, is trailing stops, but also, you know, volume spikes and things like that. We talk about that on the show. We go through different strategies, and you can access the deviations. Right here, we post them every night around 8:15, and we got them on futures markets. We got them on Forex markets. We even tie them into the Nadex markets for the way that the Nadex markets tick, but not just for Nadex traders. Again, also for futures and Forex traders. And let's say you're a Fibonacci trader, or you're a pivot level trader, a support resistance trader. They just add another level of confluence for you. And what is confluence? Confluence is when multiple things come together. So maybe you have several fib lines coming together, support lines coming together, you have deviations in there. That's further confirmation of the strength of a certain level. If it gets broken, expect it to fall a whole lot further, or vice versa. If it starts to bounce off of it, it should, hold for a good support line. And there are ways to, use them for swing trading, for trend trading, and even for range-bound trading. So, premium collection trades, stuff like that. So hopefully you've started to dive into them a little bit if you haven't checked them out. But we'll go through, we'll look at some of the markets and talk about just some of the ways that you can put these together. So first thing, let's go ahead and get up a chart. Euro dollar moving like crazy right now today. Just a big, big move. And so I want to throw that chart up for you, and we'll go over it. And give me just a second as everything loads up. There we go. Okay, so that ought to be sharing over on the screen about now. And you can see we got that, again, that solid 2 deviation move right there on euro dollar, and moved pretty far down. And it came down to that 2 deviation level. Usually we don't expect it to move much further than that. That's a very low probability move, meaning that let's see, how do I put this? The probability of it going further, okay, is very, very small. So if you go in and you actually look at those moves, what you're going to see is that the probabilities line up about 68 to 70% of the time. It doesn't even go further than a deviation, okay? So if that's the case, well, then how far does it go when, they're actually, at 2 deviations? You're talking like a 97%, talking about a very low probability. And we have some information here inside the site on this. So let's look at it just so you can see what that is. If we scroll down a little bit, we actually throw in, like, what is a T deviation move? There's a 95% probability that it won't break out or touch that level. What's even more important is that third deviation, 99.7% that it's not going to break out or touch that level. So there's only a few percent probability that it'll actually continue to go down to 3 deviations. This would be a good clue for you to look at starting to trail your stops on any positions that were short that you were in. And we can go through a method that I've taught that's works pretty well. You can use it on different markets. Yen, like I said, also likewise went down. And often we'll see, a bounce off of the level. It did decide to break it pretty heavily. But we'll go through and look at, how does the, tightening stop method work whenever you're trading on these. So obviously, it's been trending down, down, down. It's not that hard to see the down move, the downtrend. Okay? And so what can you do to trail your stops when it's moving down? Well, the first time we get it is look at the bar. And I usually use 10-minute bars on this. I've just found them to be most consistent after, calling these out day after day right here on the show. And I just saw this constant pattern. It actually helped lead to this rule. And it's where whenever it breaks below a deviation level, I'll put the stop like 5 ticks above the bar that closed below it. So this bar right here closed below the deviation level. And so what I would do is, let's say I'm short from back here. I go in and I would put my stop just 5 ticks, above that level. And then if it closed, at or above it again and then below it again, I could move it down a little bit further. So I could add another stop. This would only be like maybe a tick. It wouldn't be really much of a move. And then it goes down and it closes below another deviation level. Well, now I can move my stop again. So right over here, about 5 ticks below this, it comes over here, it closes above it, and then closes back below it. So I can move it down again. So right over here. Gets close to it, but doesn't break it, comes back down, closes below this deviation level. So now I can tighten my stop yet again. Okay? So right over there where it closes below the deviation level. Keeps going on down. This one closes at it, but not below it. Let's just double check, but I want to make sure. Yeah, 134.18. Actually, we did get 1 tick below. Since we got a tick below, we get to move it down again. This really lets you have an objective way to let your profits run, which can be really challenging. If you traded for any time, that. It can be very challenging. But by using this, it gives you a little bit of room, but also does have a method for allowing it to move while tightening stops. Well, it closes above it. It closes below it again. So you're able to move it again on this bar. See how it closed below? We moved it, closed above it without stopping out, closed below the deviation line again. We move the stop right there. Very simple. And so it keeps going, and let's see what else we can do over here. We got it coming down, hasn't closed, above or below, finally closes below it again. Okay? So right there, move our stop. So just above that level, comes on down, closes above it, closes below it yet again. Move it again. You're talking maybe a tick difference there. And it's coming back down, but so far you've locked in all of that profit along the way. Now, another method, let's go and look at euro-dollar, because we can pull up a decent futures volume data on there, is we're going to add in, okay, euro-dollar, but we're going to add in the actual, up here would be the easiest way to add it in, and we're going to add in the futures contracts. And to see if we see any kind of volume spikes or anything like that that we can use. Put that on 10 minutes, but we're going to make the bars transparent. Okay. Now, obviously, if you were doing, just spot or just futures, you wouldn't have to do this. But if you're doing spot, you'd need to do this so you can get true, at least volume data right there. And then hit apply. Once I do that, I'm going to go in, and I also want to now change my volume indicator to, instead of being on the spot, I'm going to change it to be on the futures. So I can, because you're getting tick volume data, not actual traded volume data. And so to do that right there, hit apply. We can just shrink this down out of the way. Now we have the futures volume on the euro dollar, where we can see if we have a volume spike going along the way at a 1 deviation level or lower. We did get a volume spike here, right at 1 deviation. But we didn't break the high of the bar after it. So if you haven't followed me before when I've talked about volume spike, what we're doing is we're looking at when the market hits a deviation level and the volume bar is twice the size of the bars on either side. Okay, so like this volume bar right here is like, almost 14,000. This one's only 2,300. This one's 6,000. So this volume bar is twice the bars on the other side. Then we look for a reversal if the bar after this within 3 bars breaks the high of that bar. Well, as you notice, we didn't break the high. It kept going down. So it was a confirmation of a continued drop. Don't have a volume spike. This one's not twice the size of that one. Right here, same thing. Looking, we do have a volume spike here. Okay, so we have another volume spike happening right at the 2 deviation level. But when we had it, we didn't break the high of this bar, the bar after that, within 3 bars. Notice that. We had that volume spike. Again, this volume double the size at another deviation, but it did not break the high of that bar, so it didn't give us a long trade yet to go long on here. So now we'd have to wait for another volume spike or something else to tell us to go the other direction. The only thing we've done so far is trailed the stop right there, then closed above, then closed back below. So you had to stop right up there. Would be where you'd be putting your stop over on the euro-dollar. So that volume spike really does help you out. Also, it gave a little confirmation. It broke through. It wasn't able to pull back. Therefore, that's just confirmation the trend's going to keep going. At this point, we didn't really get, like I said, this one wasn't a volume spike. That one was, but it didn't break it. So with it not breaking it, then we don't want to fade it just yet. But doesn't mean it won't turn around. I mean, we are at 2 deviations. We're pretty exhausted at this point. So we just got to keep an eye on it. And as you can see, it has went down and sort of spiked back up a little bit. Okay, so that's the simplicity of volume spikes. And we'll go in, we'll check out some of the other markets and to see where we're at on the day, on the deviations, on the moves, on the news, and everything else we like to go over right here on the Diagnostic Trading Hour. And then let me drop off the additional market we have on there. And then we'll just reload up the normal template. Okay, so we got the S&P. It did have a nice move down to 0.5, went right back up to settlement, came on back down to 0.5, wasn't quite able to hit the 0.7, and ran right back up to settlement, and just hesitating right there. So settlement being one of the strongest numbers, it's good to know what that number is. And if you don't know what settlement is where the CME, or whatever exchange it is, has a specific method for settlement. Well, the CME, the way that they settle futures contracts, we'll talk about that right after this break. We'll go into what the VWAP, volume weighted average price for settlement is on the CME and how they come up with that number and how you can check it. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. So a quick summary for you on settlement. It's pretty simple. They just take all the trades. CME takes all the trades in the last 30 seconds. They multiply the volume times every price that was traded at that price. So if it's traded at 1,400, 7,000 contract, they do 1,400 times 7,000. They get the weighted value of that price. They add up that weighted value on every price traded times the volume, and they divide it by the total volume traded. And that gets them the settlement price, which is used for options for expiring in the money. It's used for mark-to-market. It's used for a lot of things in trading. Also, it's used for gap fills and on down the list. It's a very, very important number, very important level to use in your trading. So you can get those on CME's website. I'll show you that in a little bit here. Also, of course, we post them every day on the deviation levels for you. Got a caller. Got Luke here from Nevada calling in about the news trades. Hey, Luke, how can I help you out?
Hey, Luke, sorry, Darrell, how you doing?
I'm doing good, man.
Good. I had a question yesterday. We were doing an expiration trade on the NASDAQ, and I noticed the contract prices were insane. There was like an 80-point cushion for the 4 o'clock expirations with 15 minutes or less to go. I was just wondering if you knew what was going on, or I've never seen that before. Other than that one gold trade you did a couple months ago was the only thing that was similar that I noticed that the cushion was so large on it.
Yeah, the cushion was on there because Facebook earnings were about to come out.
Okay.
So it caused a massive surge So I have traders that went one direction and it worked out for them, and traders that went the other direction. Obviously, it didn't work out. If you did 4 o'clock, you're probably fine, I guess. But the 4:15s were just like, it was through the roof. Yeah, I mean, you're talking like literally 8 ticks or 8 points on the NASDAQ.
Yeah, so
and,
it was up to 10 or 11 at one point.
Yeah, I mean, it literally just it went through the roof. So, like, when those earnings are coming out, and apparently they release them about 4:03, it's not just a totally normal schedule yet, being a pretty new stock. But when those earnings are coming out, what you'll see, and that's what you want to be aware of. And that's, one of those lessons learned, even for myself, I go through and I try to log every lesson, is when you see something that's just abnormally large. Now, a lot of times I've seen it be really large like that when it's just a Fed funds day and the market just went nuts. Okay? But you always want to be, on NASDAQ, on the Dow, you want to be aware of earnings, because if you do see that big pump, that just like you have this massive cushion, you're like, this is the best trade in the world. That's when you want to go, wait a minute, why? Why is it so good? And it's just because they were building in that volatility. And let's see here, I'll show you, pull up NASDAQ right over here. But yeah, you're talking about where you saw, like, you could get like a $20 or $25 premium collection trade that was like 8 or 9 points in the money.
Exactly.
Yeah, it was berserk. So yeah, looking over here, and I mean, we're talking like right here about this time. You're looking at the thing. I got 4 o'clock, and you're seeing ones that are like up at 33.84 and stuff like that. That are you can go in and sell them for $20. And usually you're looking to get 5 or 10 ticks, but definitely not like 5 or 10 points. And so yeah, and as you can see, it just exploded right there on the Facebook earnings when they came out. It flew right up. And so that's what built in the implied volatility, because that's part of the pricing model, is live implied volatility. And you don't really even have to know what the implied volatility is. You can literally just go, okay, this, once you've traded them for a while like you have now, then you'll just see, like, this is really big. And so something is about to happen. And usually when that happens, I would say, lesson learned, like I said, even for myself, I'm probably going to look at, like, okay, should I be strangling this thing instead of trying to do a premium collection? Does that make sense? Because, like, there is a big expected move in the market right now. Yeah, they're pricing that in. They're thinking this thing's really going to fly. And so that's why they're pushing it so far out there. So otherwise you'd be getting like $20 ones like 3 points away, or 5 ticks away or whatever. But if you're getting 20 and $25 and there's like an 8-point move in a matter of 10 or 15 minutes, then it's definitely earnings related.
Okay. Where the other question I had, Darrell, is is there a site that we can go to get that type of information for those particular big news events and the markets that they affect?
Well, I mean, earnings are going to affect the indices. So you can hop on like earnings.com. Okay. So it's a good website. It lists out, all the major earnings. Actually, lists pretty much all of the major earnings out. But earnings.com is a good one. You can go over here and, it'll list them out. So just look for the major, higher weighted stocks in the group. The Dow, you can just, you might want to put that on your calendar, just all 30 stocks in the Dow. Because there's only 30 of them, so if there is a surprise move, and you'll you'll know that there's a big surprise move expected. I'll go over a couple more tips for you. Stay right there. I'll be right back, okay?
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here. Luke, I'm not sure if you're still on the line. Are you still on the line with me?
Yeah, I'm still here.
Awesome. Yeah, cool. But earnings.com will list a bunch of them up. You can also pull up like the weighted averages. But you're going to get close. Dow obviously is pretty easy. The NASDAQ, they use a volume-weighted proprietary formula, so they don't quite give out all their secrets, I guess, which is a little frustrating because you really want to know which ones are the best ones to focus on. What I do is I look at the ones that on most of the ETFs and stuff are greater than 1%. And what that does, it lets me know, okay, these are like the 10, I need to focus on when I'm looking at it. Let me see if I can find, yeah, there we go, over on Morningstar. It's just one of the ETFs, but it'll show you the weightings on some of the composites. And if I can, let's see here. I know I had that up yesterday. Let's see if it'll still show it. But it showed a weighting on a lot of the stocks that were built into the composite. Let's see. I'll have to find that for you and post it there in the den. But you basically just want to search for that volume-weighted average. And I mean, even I want to say Facebook is it's above the 1% mark, but it's not one of the bigger ones. So, but obviously it's still if they move big, and that really is the biggest key on these is if they move like really large, then that's where you're going to see obviously that move in the indice that makes it a tradable number for a news event. Now, as far as other news events, I mean, you can use websites like investing.com or Forex Factory for, currency type news trading. The issue is they'll label a lot of things with a red mark, which is supposed to mean high impact news. That doesn't have a lot of high impact. So what one of the things I try to do on the show is I try to go through and talk about, these are the tradable events, based on stats that, at least statistically a majority of the time have a decent move. Like 70% or 80% of the time, break, say, 50 pips, which is probably about what you need on most news trades to do like a strangle or a straddle. So you really want to, you can go back and you can pull it, which, is, the way to do it. But the way you'd have to do is, like, let's say if you were on Forex Factory and you wanted to do all this stuff manually, you could go in and pull, like, Canadian GDP and open it up, and then you could go in and look at, like, all the historical dates for, like, the last couple of years. And you have to have intraday data to do this. So you need a data feed provider that provides intraday data for you. Genesis, Reuters, IQ Feed, Kinetic, just depending upon who you're using. Maybe eSignal, I'm not sure. Maybe TradeStation. I don't know if they get that far back. But load that intraday data back. I bet TradeStation does. But go in there and you have to pull up each date, look at the time, because they'll actually list the time of the release. And then you can see how far does it move, average height. It's a lot of work. But, if you have, like I said, I try to put all the stats together. It makes it a lot easier on the stats. And, like for instance, this morning, we can pull one of them up that I was looking at. We had the dollar CAD as an example. And they definitely don't all work out, but that's why I like the spreads versus the strangles. So that way if they don't, then you'll still be okay. But the stats I had for the dollar CAD, and let's see, let me pull up. I'll give you the details, all the details on it. We had an expectation of a 0.2, and I was looking at if we got even anything above that, which we should see a stronger CAD. We got 0.3 on their GDP, which is great, and the number we were looking for on it was like 60 pips. And so if we go over here and just measure, right here the report came out at 830 on their GDP, and we go high from the report release down to low within 2 hours, we got 40 pips. So it wasn't even the biggest move, but you should have been able to get that trade on, and the risk I mentioned on that trade was $35. So if you put that trade on for a $35 risk, you should have been able to get out of that trade at worst case at break even. So you definitely want to use the spreads as much as you can. The only exception for news trading where I use binaries to do strangles would be on NASDAQ, because the spreads tick so small. Like 1 point is $1 versus $10 or whatever, like on ES or the Russell or the Dow. So I always want to use binary strangles when trading news on the NASDAQ. So if I'm going in, like I did Apple, I went and did a strangle on that one, risked like $30, made 70. I did the same thing on Google, risked even less, made even more on those. But I was doing NASDAQ for that. So if I'm doing the earnings ones on NASDAQ, then I'll use binaries. But for everything else, I'm pretty much using straddles on spreads.
Okay.
So I know it's a lot of information for you. But earningswhisper.com, and earnings.com, Forex Factory, all those are sites that I reference to help me, find the information I need to put together the news trades.
Okay, great. That was very helpful. I appreciate it, Darrell. Keep it up.
Hey, you bet, man. All right. So let's check out where everything is right now. One other thing to note here on this CAD trade is we did hit the 1 deviation level. So that also would have been another helpful tip for you for, look at tightening those stops pretty soon right there. Let's go through. Let's check out a few of the other markets. We got the, we'll pull up the indices and scroll through those. We got the S&P sort of just hopping up and down right there. Half a deviation, almost 0.7, but right back on up to settlement. And keep your eye out for, volume spike reversals and trades like that. They can be pretty helpful. And you got to do them consistently, though. If you just, pick one or two here and there, obviously, just like any other trade, you can't cherry pick. You got to follow the system all the way through. But they ought to serve you well. We got the Russell falling on down. Has not reached settlement yet, but it is working on it. So it's pushing up towards settlement. I had a trader ask me a question this morning. They asked, do you pay attention to volume spikes if they're not at a deviation level? I'm aware of them, but I don't trade off of them. Like, I don't, I'm like, okay, there's a lot of volume. I need to be looking for potential pullback. But I don't, like, tighten stops immediately. I don't enter a trade. I don't execute an entry if it's just, like, somewhere, like, say, randomly in the middle of a deviation. So, like, right here in the middle of, like, settlement and 0.5. Let's see here. We got the Dow. And on the Dow, it's moved down, almost reached 0.5, moved on up. Another question I got from a trader this morning was, does it have to hit the deviation level exactly? I give it a plus or minus 5 ticks because, a lot of times you're going to go past it by a few ticks, below it by a few ticks. But the other important thing to really note is look at that high to low, okay? So if we go settlement to 0.5, you get 74 ticks. What if we go to high to low? That's 89, 90 ticks right there. So you want to look at that high to low, not just the deviation level itself. So obviously I love it when it's right at the deviation level. Majority of the time it is. But I want to give it credit, okay? If I see everything bouncing off that, I want to give it credit if it's moved from that high to low, that half deviation or 1 deviation mark. Let's see here. We got the NASDAQ today. Moving on down to 0.5 and has filled that gap. So it did have a gap earlier this morning and was actually able to run up and complete it. It took a little longer than the others. And we got the Russell, like I said, working on it, but not quite there. Let's check out gold. So gold had a nice run today. And we can see right here it settled. And it had this big VWAP settlement price, like right there as it's closing down at 130. This would be where actual settlement would be taking place. Moves on down to 1 deviation, stays there really until the gold pits open. Gold pits open up right around 720, and then, bam, falls on down to 1.5 deviations and is holding right now. And we go and look at copper. Check that one out. And copper is crazy fun to trade and crazy volatile. So it's one of those things, like you better demo it a long time before you hop into it. Now, if you're trading on Nadex, obviously you can limit that risk, but it moves fast and it's worth a lot, okay, like per tick. So just the way that the contract is built. And but, we got about a deviation move, maybe, like I said, less a tick or so. So I'd consider that a deviation move right there on copper before doing a pullback to the half deviation level. And plenty of volume spikes happening as well. You can see them just all across right here, the board. And we'll go and let's check out silver. On silver, there's a volume spike for you. Look at that. Right here in the morning, first thing in the morning, out of the gate, comes down, nails the 3 deviation level, and then does a pullback up to 2 deviations. And I got that volume spike, I said, right there, does a pullback. So if you're doing an in-the-money trade, obviously it would have been great. Out of the money, if you're targeting the 2 deviation, I'd like to target the next deviation level, and that would have worked out great for you as well. And let's see, let's go ahead and look through some of our currency pairs. We got the Aussie dollar. It ran on up, and we got a full deviation high to low twice. So low all the way up 1 deviation, and then this morning ran all the way back down. And now it's slowly but surely trying to climb its way up. And we'll see, if it can get back up to settlement of yesterday's price before it's all said and done. And we had the euro, like I said, we went through that one quite a bit earlier, so I'll just skip on past that one. We'll hop on down to the pound. The pound dollar has moved on down to 0.5, almost there. I mean, we got definitely got a half deviation, but it's really just choppy. So we are getting some up moves, but with a lot of chop in between. Pretty tough trading on that one right there. And check out the dollar CAD. We got, like I said, that solid 1 deviation move, and sort of been holding strong there. Dollar franc. And then we'll go into our news trades here right after this. Was spiked up at the end of the day, pulled on down a half deviation, ran up half a deviation, pulled up a little bit further, which is a 1 deviation move from high to low, right? Because half deviation down, half deviation up, and looks like it may settle right there around that half deviation mark. And we got dollar yen. On dollar yen, just explosive. I mean, ridiculously explosive move yesterday. So look at this. I don't know if any of y'all caught this, but it was nuts. But you got the dollar yen just chilling out all day, and then right there at 2 o'clock, the thing literally flies up like 50, 60 ticks. Just not your normal move in dollar yen, but does a fly up right there to 0.7 before it hesitates, pulls on back, and then goes on to settle. Right now we're looking at somewhere around 0.5. All right, so that wraps us up on sort of this where the markets are right now, and I'll throw the deviations levels up there for you so that way you can be looking at them a little bit while we go through and talk about the news that is coming up. So, what all we got going on and how can you take advantage of it. And also, of course, what came out today. Well, we already talked about the dollar CAD trade. It was a little bit off. It came in. We got a decent enough move to at least get a break even, maybe even grab a decent little profit on there, depending upon what entry prices that you were able to, hop in on the trade. Unemployment claims, I don't really trade that one itself that much, but like I said, you did have the GDP. And, of course, it's Halloween, so who knows what's going to happen, right? But let's see what we got for the markets tonight. The Aussie, by the way, will have its PPI number come out. And I'm sure my little girl's going to be dragging me around everywhere, so I doubt I'll be looking at that. But usually not even a big mover in and of itself. So it's usually, unless it's just really off, I mean, we're talking 10 to maybe 30 pips. So, but that will cause some volatility. So if you are trading the Aussie tonight, be aware the PPI is going to be released at 8:30. So you can, potentially take advantage of that, but also just, be aware of it. Tomorrow, don't forget, we do have a French and an Italian bank holiday. Should not have a massive impact on the markets. They're closed for All Saints Day. And let's see what else we got. We got the manufacturing PMI. So coming out tomorrow morning. Instead of being 4:30, it's now 5:30 because they had their time change. Okay? So we got, this again, that's the Britain PMI report coming out. It actually comes out at 5:28. Many websites are listed as 5:30. Just be aware it comes out at 5:28. If you have a Reuters news data feed, you'll actually be able to get it early by a whole 2 minutes. So I'm not quite sure how fair that is, but that's just how it happens to work. You can use the 6 a.m. or the 7 a.m. spreads or binaries. You could even go later if you wanted to, if you see ones that are at a better price. Or a lot of times, sometimes like there's $1 difference. If you see that, then why not get the extra time? So we're looking at the number to come out at around 56.5. So I think that's the last estimate I saw. Of course, those numbers constantly are fluctuating. It's like 56.3 is the current forecast, but, it fluctuates there. And looking for that number to be off by a couple points. If it is, we got to get a nice big move. We're looking for a high to low on pound dollar of 60 to 65 pips. Pound yen, 70 to 75 pips. Pound yen has the higher probability trade here. 70% of the time it breaks 50 pips. So if you can get that trade on for less than $50 on the pound yen, then that's going to be your trade. Look for a big divergence. If you don't get a decent divergence from the number that comes out, then you're going to want to look to exit that trade at break even. But that's the beauty of the spreads. It's not too hard to get out at break even as long as you get just a decent move. And so that's your pound report. You're going to have to get up bright and early for it, but now it's 5:30, so that's sort of an advantage. And used to be 4:30. And then if we go over here, get the U.S. ISM report. It's going to be coming out at 10 a.m. And looks like the latest number on that, 55.3, is the expectation. So if we can get, again, 2 points above or below that one, we'll have a trade. I'll talk about the stats on that trade when we get back from this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks. Welcome right back here to the Diagnostic Trading Hour. So just checking things out for you, looking at everything. We're talking about the potential U.S. ISM report tomorrow. It is Friday, so you want to get as much time as you can built in because a lot of times those markets move a little bit and then they just stop. So on the U.S. ISM, what we got is we got the euro dollar. Okay, 70% of the time breaks 50 pips. Nice, with a 60 pip average, high to low. The other, so I'd be looking at limiting my risk. I deal to about $40 on that trade. Pound dollar. I would a little over 60% of the time it breaks 50 pips. But when it does it by a lot more. It has a 70 pip high to low average. So you could put in a little more risk, around $45, $47 risk on that trade as a max risk. So euro dollar obviously being the pick, but pound dollar being a potential alternative. And anyways, but check that out. That's for the U.S. ISM. You'd be getting in before the report. The report comes out at 10 o'clock. And one of many ways to trade, obviously, over on Nadex. And see if I can find one more piece of information out for you before it shows up for the day. But we might be able to see if there's any, I want to pull up my stats here to see if I can find anything from maybe pre-news trades going into that, because it is a 10 a.m. news release. But a lot of times some of these will be too volatile pre-news, so you won't really have the butterflies that you'd like to have. So give me 1 second. I will let you know. Okay? All right. So US ISM releasing at 10 a.m. Pre-news were pretty volatile. So we're looking at like 31 ticks an hour and a half before the dollar yen, 25 ticks 30 minutes before, 15 ticks 30 minutes before. So 15 ticks 30 minutes before, 25 ticks an hour before. So if you wanted to do a butterfly, so this is sort of a bonus trade here, you could look at, I'd say, either Aussie dollar or dollar yen. Both of those have the lowest average moves. And they're pretty much on par with each other. You're looking at about 30 pips on 90 minutes pre-news, average high to low. You're looking at around 20 to 25 pips, okay? Average high to low, 60 minutes before the news. And you're looking at around 15 pips, 30 minutes before the news on Aussie dollar and dollar yen. It's like 15 on Aussie dollar, 16 on dollar yen. So those would be the two pairs to, keep an eye out for. Maybe look at entering at, say 8:30 as potential butterfly to add on. So just like I said, just a little bonus potential trade on top of the straddle strangle on there, and that would be the only two I'd probably consider looking at for the pre-news markets. You also just want to keep an eye out, see what else is coming out that morning. You're going to have, of course, the manufacturing PMI already being into effect, and then you'll have FOMC Bullard. He's going to talk at 9:10. So be aware he may mess things up depending upon what comes out of his mouth. If some big comment about tapering or whatever comes out at 9:10, then that could obviously have a little bit of an impact on the market. Going into the weekend, China's going to release its PMI on Saturday. No big deal there. Sunday, Canada is going to be switching its daylight savings time, and so are we. So don't forget, this coming weekend, you're going to be moving your clocks backward by an hour. Okay, on Sunday. And doesn't make any sense to me. Just leave it where it is, but whatever. We go on over here. We got the yen. Japan will also be having a bank holiday, culture day. But they'll be having a holiday, so that, of course, will affect, yen liquidity a little bit. And then Aussie dollar will have their retail sales numbers coming on out. Not looking for a major move off that report, but should add a little volatility for you on the weekend at 8:30 p.m. on Sunday evening. All right, y'all have a great day, and stay tuned. We have another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.